University of Missouri Extension economist Ron Plain is our hog market analyst this week. U.S. pork exports through the first 6 months of the year were on pace for their best year ever, with data back to 1989. But numbers from July, released Thursday, might have put a damper on that. American pork shipments last month were down 13% from June and the lowest since February 2016. After a relatively strong July, the last half of August was extremely negative for market prices. In only 10 sessions, the October lean hogs futures contract lost almost 15% and sunk to its worst level in 10 months. We talked with Ron Wednesday morning and began by asking him to describe the recent movements.
Well, we've seen both good and bad this summer. A quick run up in late spring and some strong prices that fell off fairly fast during the month of August. But all in all, it's a profitable summer for most hog farmers.
Well, what led to this slide recently?
Well, increased slaughter, and we've got more pork on the market, and so that puts some pressure on cutout value. Also, as we moved later into the summer, pork bellies, which is a strong part of the cutout value in the spring, started weaken in August, and that took hog prices down.
Tell me more about the strength in bellies and what that means for the producer.
We set record highs for pork bellies in midsummer. Strong demand for bacon continues, and then we always get a kick in midsummer from the demand for bellies to make bacon for BLT sandwiches. When tomato season comes on, consumption of bacon goes up even more, and so very strong situation, despite the fact we had record hog slaughter for that time of year, therefore record belly supplies.
What's international demand been like? Are they wanting those pork bellies as well, or is it overall for pork?
Well, the demand for bacon is not as strong elsewhere in the world as it is here, but pork demand's good. We're up 12% in pork exports in the first half of this year, and so that's contributed to the overall demand for the product and helped support prices.
Describe some of those markets. What markets is the U.S. doing well in, and which have slipped a little bit?
Well, Mexico continues to be a growth market. They're our biggest foreign customer, and they continue to widen that gap over Japan, which has been fairly steady. Canada is a very consistent market. It's one of the top 5 or so. South Korea has been increasing in their purchases of U.S. pork in recent years, and they bought a lot this summer. Bit disappointing as far as China and Hong Kong purchases. On the flip side, a fast new growing market has been Colombia in South America. They bought a lot of U.S. pork this year so far.
Why is China down?
Their production is down. We'd think that we'd be able to put more pork in, but they're buying a lot of their imports from Western Europe, and I guess political reasons may have something to do in their preference for European pork over U.S. pork.
Well, you had mentioned South Korea. There are reports that the president's looking to withdraw from the free trade agreement with South Korea. Can you describe what that market is like for the U.S. and possible implications?
Well, yes, South Korea is typically the 3rd or 4th largest buyer of U.S. pork. South Korea is a very heavily populated country with a lot of affluent people who can afford to eat meat, and so it's been a growing market for us. We'd sure hate to see something happen to cause that to change, because the outlook is that they'll probably buy more pork from us next year than they've purchased this year, which is more than last year.
Well, let's come back home here. What does USDA expect for production over the rest of 2017?
Well, more pork. They're looking at 4% more pork in the second half of this year. That we were up not quite 3% in the first half of the year. So increased hog slaughter and more pork on the market, that's going to probably put pressure on things, although their forecast has the increase in production a bit higher next year. 3.6% more pork in 2018 is their forecast, up 3.5% this year.
What would you expect seasonally here as we go into fall?
Well, seasonally, weights go up, and with this cool weather in the last few weeks, it's already started up in a lot of locations, and that gives you more pork. Seasonally, we also tend to slaughter more hogs. We have a lot of hogs born in the spring, therefore 6 months later we have a lot of hogs going to market. So look for more pork and more hog slaughter. Fortunately, we've added to kill capacity this week, and our expectation is that prices will stay above year-ago levels.
At least hope in those regional areas with those pork plants?
Yes, Sioux City, Iowa and Coldwater, Michigan are the two locations. It's the plants opened the day after Labor Day. The Michigan plant will probably attract a few pigs out of Ontario, one would expect. The Sioux City plant, mostly U.S. slaughter.
All right, to close out with, tell me what margins have been like and what you might expect here for the rest of the year.
It was a good summer. Hog farmers $14, $15 profit. That's probably going to decline. The fourth quarter is usually least profitable. Probably a little dab of red ink in the fourth quarter. Packer margins have been good with these two new packing plants. We expect things will get tougher for packers as we go ahead.